So next up, we have our second panel session of the day, NFTs and the rise in digital ownership. So here joining us, we have Angus Scott from Trovio Group, Joan Westenberg from Riot Girls, Henrik Andersson from Apollo Capital. You can come down, guys. Lisa Wade from DigitalX, Michael Cotton from Meld Ventures, and Sam Cutri from OceanFloor Music.
So let's kick off. So welcome to this panel session. This is a session on NFT and digital ownership. And we have around 30 minutes today, so we'll keep the introductions pretty brief. But I'll let you guys introduce yourselves, starting with Lisa Wade, from CEO of DigitalX.
Hi everyone, I'm Lisa Wade, CEO of DigitalX. I'm just interested to get into the whole session, so I might just leave it at that.
Michael?
Thanks, Henrik. Hey everyone, Michael Cotton, co-founder of Meld Ventures. We specialise in investing in alternative layer 1 tech and new generation of technology. I'll leave it at that as well.
Sam?
Thank you. Testing 1, 2, 2. Musicians. OceanFloor Music, co-founder. We focus on education funding for the creator economy.
And Angus Scott?
Hi everyone, Angus Scott. I am the head of labs at Trovio Group. Pretty much concerned with finding exciting things and investing in them or building them. That's it.
Fantastic, a really fantastic panel here today. So I think crypto and NFTs can be quite complicated, so maybe we should start with some definition, maybe explain what is an NFT. Any volunteer on the panel to explain what is an NFT? Angus, you want to have a shot?
Was I just the last in line there? No one to do it. Sure, obviously, non-fungible token. I think what is non-fungible is probably the key element there that's often overlooked. My view is that the non-fungibility of NFTs is the capture of the scenario, the timestamp in that moment of time, and the scenario that it was sort of developed under. So if you're looking at sort of that collectible JPEG craze, which I'm sure everyone's probably familiar with, is the capture of the conditions under which that thing was developed, and then as we sort of progress and the space evolves, the capture of bearer assets, conditions of financial contracts or whatever it might be at that moment in time in that condition.
All right, thank you for that. So NFTs are a unique digital token, and I think last year was really the breakthrough year when it comes to NFTs. We saw a lot of digital art NFTs. We saw gaming markets develop, and also metaverse kind of digital assets. But I'm curious to hear what's your favorite, or what do you think is the most promising use case for NFTs? Because there's a lot of different potential use cases for NFTs out there, and a lot of different verticals that are being talked about. So let all of you kind of give your view on that, starting with you, Lisa.
I'm very glad I get to go first on this one. I don't want to steal your thunder there, Sam. I'm most inspired by the actual social impact that could happen and the social equality that could come from changing and shifting the financial value chain across many different asset classes. And I'm really excited to be on the panel with you, Sam, because I think music and art in particular are two amazing use cases. And I'm also very inspired by the Indigenous work that's been done in Australia, and I think that could ripple out into the world, into other Indigenous communities, and we could see a lot of true financial empowerment. People sort of look at technology and think that in developing countries that they don't have the same technology as we do, but in fact in countries that like Kenya that are developing everybody has a mobile phone, and in many ways in payments they've already leapfrogged us, and I do see it as the next evolution of social empowerment, and so I'm most excited about that. And obviously there's so many other use cases, but that's my favourite.
Thank you, Lisa. Michael, what's your take on NFTs in the future?
Yeah, I think I'd probably go back to the fundamentals of what blockchain was intended to do, and I think in reality it was meant to bring value, which can be through things like streamlining supply chains, removing pieces of the supply chain, creating accountability. So I think what we'll see as the most exciting part is blockchain technology used to do exactly that across a range of industries. And whether that be, GameFi, so we saw, I don't know if anyone's very familiar with World of Warcraft and how it originally started. You saw things like trading of assets in World of Warcraft done in an incredibly clunky way. It was very much not trustless. You had to trust the people you were dealing with, hope not get ripped off, all the way through to housing contracts. Even today, they're still very complex to complete, whereas things like upgradable NFTs will allow those kind of processes to be streamlined and more done in real time. And we'll see other things like commodities and other types of assets to be able to be delivered in different ways. And I think that trustlessness and that transparency will also bring a level of accountability, which especially in the last month or two with what we've seen play out in the market, I think will be particularly important and probably one of the more exciting aspects of what we'll see coming out of the tech.
Sam, what do you think?
Yes, I think for us, and thank you, Lisa, it is important for us in the creative industry. I think sort of the whole creator/owner economy is a big part of what we're talking about. And adding true utilitarian use to NFTs, I think, is important as well. So, how are we going to integrate in real life accountability? How are we going to add ownership, beyond just that digital asset in NFTs? And I think a lot of the sort of technology that we're seeing develop and that we're developing ourselves will allow us to sort of transcend the whole just digital space with the ownership of a NFT token. So I think it's much more than just what we're seeing, in the digital space. I think soon we're already seeing things like property and other things coming into the space. But for the creator and ownership economy, it's a great opportunity to actually sort of trade and monetize in a new way that hasn't been available before.
Thank you, Sam. Angus, curious on your take on this.
Yeah, great. Well, I think, first of all, I'll start off by saying I think I agree with everybody so far. They're all great use cases. I think maybe the way that I view it generally in digital assets in general is that what that really brings to the table is unencumbered information flow, whether you're looking at something like Bitcoin expressing value in an unencumbered way, or NFTs where you can start applying this to, as I said before, bare assets, title of physical commodities, that sort of thing, and all the good stuff that my fellow panelists here have mentioned. I think these are all products of unencumbered information flow, the ability for people to truly communicate value and reciprocate that value on the other side of a trade or accountability or whatever that brings. But I think NFTs are a real step forward in having stakes in a connected world.
Thank you, Angus. I think, for myself, one thing that some of you mentioned as well, I think NFTs could be really great for any type of creator out there, because I think NFTs can enable artists to connect directly with their community and build that really strong community. So that's something that I'm personally excited about. One thing that a couple of you guys mentioned was kind of real-world use cases and property tiles and things like that. We haven't really seen that taken off so far, I would say. Why do you think that is, and kind of what else is needed to solve to kind of enable that use case, if it can be solved?
I think one point of view is that it takes a long time to build something that then becomes scalable. And what I think you're seeing now is actually the tip of the iceberg, and I think a lot of work has been done, and I think the take-up will seem very rapid, but all of us who have been working in the background for all of these years, it feels like it will take forever. I think there's one example of a real-life transaction that we've done is our Carbon Koala NFTs, which was sort of a little gimmick when we went to Consensus in Austin. It just seemed so crazy to buy carbon offsets from a corporate when we're such a stand for NFTs and for this, new economy. So we worked with a startup called Metacarbon, who create carbon NFTs, and actually brought that to life. And an idea like that, I can just pick up the phone and buy carbon offsets tomorrow, and in 30 seconds. But to actually build that takes time. And I think now that we've taken the time, we have that asset that we can roll out, and now we have this concept brought to life, and we can use it all of the time to show our authenticity in our carbon offsets. And I think we'll do more and more of those things. And I think once the work is done, then you'll see a really rapid take-up.
Oh, so that's really interesting. So how does that work? So carbon is tokenized and it can be traded?
So in this particular case, yes, the NFTs can be traded, but we have bought and retired the carbon credits. So it's if you wanted to buy one of those, then we would retire the carbon. And yes, you can transact in the NFT, but the concept is that in our one it's a little different because we used it for a corporate use case. But you can do things with the carbon creatures that Metacarbon does, like buy a carbon creature that's locked into a carbon metaverse, and it doesn't get released until you've offset the amount of carbon that reflects the carbon exposure in your life or for your corporate. So there's a number of ways you can use it, and it's quite an incredible use case, as is Beta Carbon, our partner today, but we can talk about that later.
And they're here today as well, right?
Yep, Beta Carbon, we've got trees at the stall. And those trees represent 1 tonne of carbon, just in case you didn't know.
Fantastic. So last year we saw a very high level of interest in NFTs, and this year everyone is talking about the crypto winter. Which projects, in your opinion, have the highest chances of surviving? For example, we saw a lot of PFP products like digital art, digital pictures, those kind of things really take off last year. Do you guys think that the market will survive, and how will it evolve? This is for any one of you.
Oh, okay. For the newest startup here, of course. Well, I guess during the 2020-21 sort of boom, let's call it, there were a lot of projects and products that were kind of built on shaky ground, so to speak. The concept wasn't really strong. It was hyped up. There may have been some good people on board, and that drove that product, to the market and to the place that it went. And now we're kind of seeing a lot of those products kind of disappear. Token valuations were massive, and thank someone or something when we didn't go to our token generation event earlier this year, and I'm really glad that we didn't. So it's probably going to be in Q1 23. But I think your idea has to be strong. You've got to have strong fundamentals, a strong team, and you've got to have a bit of a runway. So a bit of financial backing. So I think if you've got a year in you now, you're going to be okay.
I'll add to that, Henrik, if that's okay. And I think it probably talks to the previous question a little bit as well. I think some of the things that we're missing, that'll be some of the more promising projects, is the things that allow the sort of products to come to market that are needed to really use this technology. So I think things like middleware that allow users to more easily engage in blockchain tech, I think will be really important. At the moment, we kind of have two extremes. We have full custodial or completely non-custodial. Full custodial is extremely easy, but it's kind of counterintuitive to what blockchain tech's meant to do. And I think we'll see some more middle ground be developed around wallets and user experiences. I think the other piece that will be quite important is development of tech around things like trustless royalties on chain. There's still a lot of work that needs to be done in these kind of areas. And I think the other piece which has been stopping adoption to some degree of real world assets is how do we make the non-blockchain piece, before a lot of that transparency comes into play, how do we make that more transparent and more accountable? There's not a lot of a point to digitizing something if it's still completely opaque on the non-blockchain component. So I think we'll see a lot of work from a lot of teams around how we make that component a lot more trustless as well.
I have a quick answer. Hard yes. This market is here to stay. And I think that what's really important is the sort of essence of this industry. It really is a lot of passionate people doing a lot of great work. Yes, when they can raise money, it's well and good, but that work will still carry on in people's garages, in basements, and the game-changing nature of digital assets will mean that work will still get done.
Thank you. Next question is for you, Sam. So a lot of people are excited about the use of NFTs in the music industry. I know you don't focus specifically on NFTs, and you have a fundraising platform, but could you talk a little bit about how NFTs could be used in music and for the music artists and creators out there?
Sure. So, I mean, at the moment we're seeing many artists bring out NFTs with their music and videos. We're also seeing artists offer NFTs in a funding capacity, so have ownership of the tracks, after release. I think there's great value in NFTs in music for the release of music and videos, but I also think there is great capacity for other services, such as maybe VIP tickets, other use cases, and how do we integrate in real life use cases in the music industry as well. So, and how do we track that, without oracles and so on. So I think that technology is getting developed, and we're seeing great use cases at the moment in the space. I'd like to see a higher level of adoption from the smaller sort of 90% long tail of artists that aren't in the top 10%. Of music making artists, and that's what we concentrate on, and I think there's lots of growth potential in that area. So it's great. I think there's a long way to go and a lot of opportunity for development in the space as well.
Thank you, Sam. I know, Michael, you're pretty deep in the Algorand ecosystem, and we have seen some early music NFT platforms launch or being launched on the Algorand platform. Can you talk about that and what's happening there?
Yeah, certainly. So Algorand, for anyone who's not familiar with it, is an alternative layer 1 tech developed by Trovio. This is not meant to be an Algorand spiel, but one of the greatest computer scientists to ever live, won the equivalent of the Nobel Peace Prize for computer science, the Turing Award.
Then what we need and where we need the world to step up is, and especially in Australia, is from the investment side, is people like superannuation funds starting to look at it as a real asset class for investment. And I think that there is a very long journey to that. Anybody who's ever tried to get money out of a super fund knows that for a reason they have trustees, and we need to speak to the highest common denominator of the trustees and tick every single box for the due diligence on a risk-return basis. That is a process, and that is a journey we all need to go on to actually build the infrastructure for digital assets to meet that requirement, which I think we need to do as quickly as possible. Otherwise, every person in this room is an investor with their superannuation. We'll miss out on the build if people like us don't do the work now.
Thank you. Michael, you're an investor in the space as well. What are you looking for when you invest in this sector?
I think in terms of what we generally look for is teams that are dynamic. So I think in many ways, repeating what both Lisa and Angus said in some ways, but what we're really looking for is teams that don't just have a good idea, they also need to be able to execute, they also need to be able to be resourceful, they need to be able to understand what a business model really looks like and what foundational fundamental pieces they need to achieve their goal, and have a really strong understanding of that. I think venture capital does have a role in that, which is, I think you get a mixture of projects. You get projects that are, two people in a garage that have a really great idea and that are really capable of delivering amazing tech. And then you get projects that are far more advanced and sophisticated. But I think venture capital's role is, to make risk assessments on those different projects and then look where you can actually help a team that maybe has the capability of getting to that level of, dynamicism and helping them actually achieve that goal. So I think for us, we look for people that we think will be future parts of what that strong, powerful founders and CTOs and CEOs look like, and then we try to play a role in helping them achieve that goal.
Thank you. So one question that I heard other people sort of bring up sometimes is kind of who will be the winners in Web3. So we obviously saw a lot of new companies coming to the market with Web2. Are those the companies that will lead Web3 as well? So the Twitter, the Instagram, Facebook, those kind of players, are they going to be the winners in Web3, or are we going to see brand new platforms coming to the market that are more crypto native, if you like, that will kind of lead Web3?
Oh, I'll go first then. So I genuinely think you'll get a mixture of what you've just said. I think that any savvy corporate right now, larger corporate, is looking to make acquisitions in the recent shake-up in markets and looking to onboard the technology that they will need. I think the people that are building the picks and the shovels now are of the financial future and have that vision of what is needed for things like, probably the biggest thematic will be the tokenization of real-world assets, so the next evolution of NFTs. What is needed for that shift in the market and that massive transformation of the whole world economy, the people who can have that vision and invest in the picks and shovels of that now will be the survivors. And then I think you'll have some, transitions of Web 2 companies into Web 3 who'll, invest in stable coins and things like that naturally merge their businesses from Web 2 to Web 3 native. Then I'll throw one in for Web 5 and really annoy my team who don't believe in Web 5, but I'm a passionate believer of Web 5 in the definition that Web 5 is the complete reversal of how human beings own their data, and we will then take ownership of that data. And I think the people that crack the code on that will be doing a service to humanity, and I think that they will win the race, whatever that race is.
So I actually haven't heard about Web 5 before. So what's the difference between Web 5 and Web 3?
Well, the definition is Web 2 plus Web 3, and it's a bit of buzzword bingo, but really what it is a data layer that sits above any layer 1 protocol that right now, if I sign up to a website, that website gets all of my data, and all of my data is everywhere all around the world. In Web 5, I will onboard my data, do the KYC, the AML, that will be given a tick, and then I have the option to onboard the people that I want in my ecosystem and to do business with on my terms, can come in and I will be their customer, but inside my ring-fenced data, so they won't own my data, I will own my data.
All right, so Web 2 plus Web 3, basically. Got it. So obviously, most people know about Bitcoin these days, and maybe you read about it. You might not know the details. You have probably heard about Web3, at least everyone here. But what are the big barriers for the next wave of adoption out there? Any thoughts on that?
Yeah, I'll have a crack. Thanks, Henrik. So I think probably one of the biggest barriers is ease of use for the uninitiated. We're still seeing a tiny fraction of the world's actually engaged in using blockchain technology and using Web3 in particular. And I think a lot of that comes down to, with non-custodial operations like with blockchain, there is a level of responsibility that I think most of the world hasn't had to take on. Being completely responsible for, everything you own, value you own inside a wallet, where if you lose the private keys, you may lose that value forever. There's no going in and showing your ID and resetting. I think that's been a particularly strong barrier to entry. And that's where sort of what I was saying before, where we need that middleware that allows people to have access to this kind of technology that's still, in the same sort of method that blockchain was intended, where we're seeing somewhere between custodial and non-custodial will be a key removal of a barrier to allow further adoption.
And I'll say 3 words: fear and greed.
I'd maybe just add to that as well. I think, Michael, you're 100% right on what you said before as well, the access. So I think it's access and the infrastructure that comes with that, and the knowledge as well. And I think the knowledge sort of evolution needs to happen both outside the community and within the community. I think, and maybe back to your question around which Web 2 companies will survive as well. I think it's easy for anyone to see the new flashy lights of decentralisation and the specific benefits that brings. But I think the evolution of the space is understanding that is one of the tools in our arsenal, the other tool being centralisation and the benefits that does bring. And it's not to say that one is bad and one is good. I think it's understanding what balance exists what Web 2 companies can really excel at things that we as a community would prefer to be centralised, and what needs to be pushed right down the end of the decentralisation curve. So I think it's building the infrastructure, creating that access, and then evolving sort of how that solution really looks for a sort of a mass market.
I might just finish with, it's such early days. We are really at the very, very beginning of all of this, and education is fundamental. And Lisa, I'm really looking forward to being able to unplug all of my data when I want to.
Will help.
All right, so we are almost running out of time here, but maybe one last question, and this is for all of you. We obviously in a crypto winter, and my question is, have we seen kind of the worst of the crypto winter? Have we seen the bottom in crypto? Yeah, just your quick take, starting with Angus.
I wouldn't be surprised if we have a little bit lower to go, but I think that's actually wishful thinking, because I'm very bullish the space, and deeper winter is a better buying opportunity.
Yeah, bullish as well. We may have found maybe a new low.
Look, I think I probably am not overly keen to speculate. I think we will probably see a bounce on the bottom for a while, maybe a bit lower. But I think in general, like Angus said, it's a good time to invest if you can find things that are delivering value. And I think for builders out there and people creating products, this is the time to build. You've got a window now where you can focus on delivering great products and can ignore some of the noise.
Absolutely. I'd say cautiously optimistic, and now is the best time to build.
Fantastic. Let's end that at this optimistic tone. So thank you so much to all the panelists.
Thank you.
Thank you.
Thank you.
Thank you.